Hi everybody, this is Gary Daniel Sentiment Timing, and this is our free video update for Wednesday, May 11th, 2016. So the markets keep trying to keep traders on edge and really leaning towards the way that they're going to be turning it, and it's been pretty chaotic. A lot of people are getting very frustrated. Yesterday I gave you the free video that I do for Markets Path, and really the theme of that was I do believe that we could push higher still, but short term we were very overextended, as well as we were seeing bearish divergences on the 15-minute charts. So it was caution that was definitely given as far as chasing the long side. And I didn't really expect the markets to get hit the way they did today, but that's pretty much been the norm for the past few years. So anyway, let's get started. I'll go over everything, try to keep this kind of quick. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. Now, we find these irrational elements in the market through Woody Dorsey's proprietary sentiment database, and as well as his technical turn dates, and then we match them up with regular technical analysis to determine where the price may turn. So time is when to expect a reversal. They're usually given a week or two in advance, so you know when to expect a low or a high. The sentiment is how the traders are feeling. So if we're looking for a top to take place in some place, or a low, we want to see bearish sentiment. If we're looking for a low and a reversal up, and you want to see high sentiment if we're looking for a high and a turn down. And it always seems like everybody is most bullish at the top and most bearish as soon as we're about to get the turn. And from that, you have the technical analysis that's they're going to try to pinpoint where the support and resistance is, so you can kind of move your trades the way you're seeing the market that's going to be moving. So it's been working fantastic over the years. Again, this is still missing this whole big we had the black hole. I haven't updated the slide, but it's done over 1,400 points in the S&P, and it's it's a really great thing. And really what you want to do is, as long as the technical time dates are looking for that reversal, you want to be looking to sell euphoria or go short, and you want to start buying these capitulations, because nobody believes the market's going to be going up. So when we were down, this is our most recent sentiment chart here, and you can see when we were at the lows and everybody was looking for a big crash to hit, this and that, we started getting low sentiment readings, 7%, 9%. And if we look at just the regular charts back then, let's go to an hourly chart. Okay, so an hourly chart. So this is when we had the sentiment that was getting very low, and we had bullish divergences in place, and we were very, very oversold here, and we were at support. So again, just going back to this, to the whole piece, time. We were anticipating that there was going to be some type of low being made because of the turn date that Woody was looking for, and we had sentiment that was then backing the low part here, and we also had bullish divergences. So you had the three aspects of what we really do with our newsletter or our service to let you know what's going to be going on, all giving a buy signal, and the S&P rallied from 2040 all the way up to 2083 in a pretty fast manner. So today, I'm sorry, let me just go back to this. Here we go. Okay, so you can see that when yesterday's report, sentiment really didn't give that much of any kind of indication, but at these readings come in at the end of the day, and this is what we sent out this morning, is that sentiment hit 90%. So this is this was sent out today on Wednesday, so this was for at the end of the day, Tuesday. Sentiment was at 90%. We pretty much know when to expect the top to come in. And even though it may not come in on that exact date, we knew you were leading up to this time, so you don't want to be getting heavily bullish on the market because we had the rally did what it was supposed to do. It took off some of those the extreme bearish readings from sentiment. We had the bullish divergences as well as the regular bullish wedge here, and all of this was fulfilled. So we went to resistance. We already know when acceleration may pick up on the downside, and we may have a rally into that date. We don't know. We just know that once it was starting to get up here, it really wasn't that safe. Now, what would make more sense is we actually do head up and come up to the 2095, because what that would do is actually give a bearish divergence and a better sell signal. But a lot of times the markets aren't going to give us exactly what we want. But you just, it was a good trade from down here. We cautioned to either tighten stops on longs or just move to cash, and now we wait for the bounce and wait for the next turn date and sentiment to get pretty extreme, and look to short the markets, because the overall trend, I still believe we're taking these lows out. So the overall trend is down. The short term was up, and now it could turn down any single time now, any day, just because of the divergences as well as the overbought conditions, as well as the patterns that have already played out. So that's pretty much the elements that we have. I would be cautious right now. I'd definitely take a neutral stand, because we really could head up and take these highs out and go up to the 2095, and it will make sense. Or we can just scream down, and all these people that got squeezed out or started chasing alongside are going to get their face ripped off. But we don't really know what is in play yet. We will have a better idea come next week as far as what's going on, and come next week, we're going to be looking to short rallies. But right now, I would keep a neutral basis and or bias, and just let the markets do what they're going to do. We're going to get a good setup, and when it does, I bought some call positions down here, and I made a small fortune on this quick move up. And you just position your trades that way when you see what is going to be taking place, and as long as everything is lining up, leverage in and take a position. So the video that I gave you yesterday, that was for the Markets Path. I do that every night. You get that as a free membership, as long as you're a member of Sentiment Timing. I typically charge $79.99 a month for it. It's nightly video reports, morning notes, email trade alerts, and we have a trade room. So if you are interested in really starting to trade with confidence again, and a trading secret that nobody really knows about, and that is sentiment and these technical turn dates, and with one of the best market timers that's been around for over 35 years, you really want to take advantage of the special that we have in the email. And with that, be careful trading, and I'll talk to you guys next week.